Good afternoon. Today, myself, Fazlo Fraiza, and my fellow team members, Chin Kai, Ip Sir Hong, Chin Wan Shen, will be presenting on our audit plan for Teck Plantations Berhad. As part of our audit risk assessment, we have conducted pastel analysis to identify the trends in Teck industry and its external environment. First and foremost, politically, Teck could be possibly affected with the palm oil biofuel ban that will take effect in the year 2020. This proposed regulation was drafted with the aim of addressing environmental concerns on illegal deforestation, specifically in Malaysia, Indonesia, and Thailand. If acted upon, this ban could spill some serious effects on Teck, as it could curtail their export demand, which leads to a decrease in their annual revenue, and it could increase the company's inherent risk. Next, economically measured, Malaysia is one of the world's leading palm oil exporter. With that, the Malaysian government has a positive outlook in their plantation industry, as it expects to reach the palm oil to 80 billion ringgit in the year 2080, based on the assumptions of higher sales price and volume, which will lead a decrease in their inherent risk. From the social perspective, there's consumers, due to the consumers' consciousness in their diets and lifestyle, a change in preference from animal edible oils to palm oils is seen, and this could essentially change the landscape of the palm oil market entirely and work in the favor of Teck's top line growth, which decreases their inherent risk. Besides that, the adoption of new technologies like Shell, a single gene that is able to control the yield of oil, and another technology that could convert biomass waste into bioenergy, which results in higher investments and maintenance costs, could increase Teck's cost of sales, and this implies a high inherent risk to the company. Next, environmentally. Despite some of their environmental concerns and their efforts towards it, Teck has been posed with uncertain weather conditions, and this results in a cost production and prices of crude palm oil to fluctuate, which causes a potential volatility to Teck's earnings, and this increases the company's inherent risk. Legally, the company has a good track of adherence and compliance to OSHA 1994, ensuring every necessities for their workers' health and safety. And this reduces the likelihood of workplace mishaps to occur, in which Teck could be faced with costs associated with their lawsuits and legal consequences. And this decreases the company's inherent risk. Overall, Teck is in an average position, as the potential losses to the company can be absorbed and offset against the normal course of the business operation. In the end, we have assessed the inherent risk to be moderate.
Teck experienced profit-making operations during the year, as their revenue rose by 36 million ringgit. This was particularly because of higher crude palm oil prices as well as greater demand. This led to a direct effect on the company's net profit, and together with foreign currency gains of 2.9 million, led them to record profit of 39 million. In terms of profitability, the company saw improvements in both their profit margin and gross profit percentages, and this is also reflected in the company's return on asset, return on equity, and fixed asset turnover. This shows that the company has greater operational efficiency during the year as a result of better utilization of assets and capital invested in the company. The company's movement in trade receivables, inventories, and cash and bank can also be seen in the company's liquidity and activity ratios. In terms of liquidity, the ratio shows a decline, and this is because of higher income tax payable given the higher profits during the year. Despite the decline, the credit ratio still reported 17.98, and this shows that the company has strong abilities to pay off its short-term debt, even without converting their inventories into cash. However, this appears to be inconsistent with the rise of inventory levels, and this should be investigated. The company's days to collect receivables fell from 49 days to 27 days. This shows improved collection of its receivables, and it also adheres to the company's credit terms of 30 days. Teck's inventory turnover and days to sell inventory show weakening performances during the year. The inventory turnover fell from 22.5 times to 20 times, and this indicates indicates that the company may have cash tied up in slow-moving inventory. And also, because the company reported high levels of inventory during the year, it shows that the company may have intentionally manipulated their figures to overstate their inventory and that will increase their profits for the year. Besides the ratios mentioned, we have also found that Teck maintains a debt-free capital structure, and this reduces the company's exposure to gearing-related risks. Besides that, there were also 3 amendments to existing MFRSs during the year, and due to the complex nature of making retrospective adjustments, this increases the risk of the company. However, we have assessed that there is no material impact on the accounts affected, and thus the risk increase is insignificant. Based on our findings, we assess the overall inherent risk to be of moderate risk, as factors that decrease the inherent risk outweigh the factors that increase it.
As we assess the inherent risk to be moderate and the control risk to be low, in order to achieve moderate acceptable audit risk, the overall plan level of detection risk will be high. So, for the audit plan formulations, as the overall control risk is assessed to be low, we believe that Teck's internal control systems can be relied on. Therefore, a reliance strategy will be adopted by testing their internal control systems. Walkthrough tests will then be performed to assess their transactions whether conforms to their company's process flowchart. If their internal control system is proven to be effectively implemented, therefore, the amount of substantive works could be reduced. As the overall risk of material misstatement is assessed to be low, the test of control could be done during the interim stage. This will allow enough time remaining during the final year audit to collect necessary audit evidence if there is any unusual issue detected during the interim stage. So, as the risk of material misstatements to be low, therefore, extensive substantive testing are not required. Next, we have identified 2 methods of calculating overall materiality, which is the blend and average methods and the formula methods. By comparing both methods, we have decided to choose the methods that give us a lower amount of overall materiality, which is the formula method, that gives us a total of 1.4 million of overall materiality. So this means that Teck's financial statements can accept up to 1.4 million of material misstatements. So by choosing a lower amount of materiality, it gives us a more prudent view in order to enhance the reliability of clients' financial statements. So for the performance materiality, a range of 50 to 70% of overall materiality will be applied depending on the risk level of material misstatement of the particular account balance. So the higher the risk of the material misstatements on a particular account balance, the lower the percentage will be required. So for the sampling criteria, a systematic sampling would be used for the account with a lower risk of material misstatements, while for the random sampling method will be used for the account with a higher risk of material misstatements. So for the systematic sampling, items are chosen in a fixed interval in the total populations. So this means that the items must be randomly distributed in order to avoid a biased selection. While for the random sampling, it is done through a computerized random number generator. So for the accounts with a relatively small in population size, no sampling will be required as the total population will be tested instead. So in order to determine how small will be the population size it is, auditors will have to decide based on their professional judgment.
So to test the performance of Teck Plantation, our audit engagement team had developed different audit programs for the different business cycles. 2 of the business cycles tested will be a sales and collection cycle and inventory and warehousing cycle. For the sales and collection cycle, our main concern will focus on the sales of the good, the debtor of the company, the uncollectible debt, and the provision of the debt. While for the inventory and warehousing cycle, our main focus will be on the purchase, the storage, the aging, the movement, and the shipment of the goods. The objective of our audit test is bring out based on a list of management assertion. For the transaction-related audit objective, the completeness, occurrence, accuracy, classification, cut-off, and posting and summarization will be tested. While for the balance-related objective, the completeness, assistance, valuation, rights and obligation, and the detailed tie-in will be tested. For the sales and collection cycle, a full set of tests of control will be conducted on the internal control system of the company, where our assessed control risks are considered to be low. Thus, a lower amount of substantive tests are needed. For the substantive test of transaction, the account concern will be the sales and cash received, or for the substantive test of detail, the account will be the debtors, which inclusive of the bad debt and the provision of bad debt. Where for the inventory and warehousing cycle, a same set of audit procedure will be conducted, where the substantive test of transaction will be concerned on the accounts such as the inventory in the profit and loss, and the substantive test of detail will be concerned on the closing inventory in the balance sheet. For the last part, an independent auditor report is issued to express our opinion on the financial report of Teck Plantation. An unmodified audit report is issued where it indicates the financial statement will give a true and fair view. The key audit matters in the report will be the revenue recognition and inventory valuation. For the revenue recognition, the main concern will be on the recognition of the revenue during the transfer of risk and return, while the main concern on the inventory valuation will be the valuation of inventory at lower of cost or realizable value. So that's all for our presentation for the audit report on the Teck Plantation. Thank you.